Szanowni Państwo,
Ladies and gentlemen, welcome to the conference, which will be devoted today to the results generated by Grupa Azoty Group in the third quarter of 2018. Welcome to all of you present in the room and also to all our webcast viewers watching and listening to us live over the internet. The results generated by Grupa Azoty for the third quarter of 2019 will be delivered by Mr. Wojciech Wardacki, PhD, President of the Management Board of Grupa Azoty S.A. and President of the Management Board of Grupa Azoty Police. Mr. Paweł Łapiński, Vice President of the Management Board of Grupa Azoty S.A. Izabela Świderek, PhD, Vice President of the Board of Grupa Azoty Puławy. Mr. Włodzimierz Zasadzki, PhD, Vice President of the Board of Grupa Azoty Police. And last but not least, Mr. Artur Kamiński, Vice President of the Board of Grupa Azoty Kędzierzyn. I will give the floor over now to Mr. Wojciech Wardacki. Welcome to all of you. Welcome to the conference, to the latest conference, which will be devoted to the presentation of our performance in the third quarter of 2018. The third quarter of the year came as no surprise to us. Given the trends in the market landscape in 2017 and 2018 were signaled, had been signaled before, towards the end of 2015 even, back then. And some of these trends, some of these signals, external signals, which were unfavorable to our business, we have managed to overcome and to generate successful performance in 2017, breaking our all-time results. 2018, as we have mentioned time and again during our half-year conference, resulted, especially towards the end of the first quarter of the year, in certain events as regard to which both you and certain analysts were not able to predict or had not been able to predict. I'm talking here specifically about the increase of the prices of our main energy carriers and the key carrier in our present structure, which has not been diversified yet according to our strategy, namely natural gas. In March, rising prices of gas due to both the weather conditions, limitation of supplies in gas production, use of reserves and storage of gas, resulted in hikes of gas prices. So the rising trend in prices were maintained also in quarter three, surprisingly, which is reflected in our performance. We will discuss it in more detail as we go on today. And the scale of that impact of the rising gas prices was quite considerable, especially in certain product groups, especially if we are talking about ammonia or urea. Then the share of gas prices accounts for around 80%. And we have taken certain measures to offset that situation, to control that situation. Year on year, if we compare our performance year on year or quarter to quarter versus 2017, as regards the prices of certain other energy carriers, for instance coal, we also experienced certain increases, and also certificates. The price of certificates also went up, especially in quarter three. After we have modified our approach to those allowances, they started to be considered as an instrument, and the price changed from €6 to nearly €30 per 1 ton of emissions allowance, which obviously naturally translated into rising prices of our operations, our costs of our operations. All those elements all those unfavorable elements and unfavorable factors in our business in Q3 have not weakened our determination and our resolve to deliver our strategy, which has been announced before. The strategy for the group until 2020. And we are consistently delivering those strategies. And this is reflected in the main events of Q3 2018. On the one hand, we acquired the Compo Expert Group in Q3. We signed the agreement, conditional agreement for the acquisition of that particular entity. And all the conditions precedent have been met right now. And we will move on to the final stage of that particular transaction in order to close it successfully. The acquisition of Compo Expert Group should, on the one hand, ensure rising revenues and also access to innovative technologies. We have defined certain synergies which will be delivered due to or on the back of that particular asset acquired by a group. We have discussed it time and again before in more detail. However, if you do have certain questions, we can discuss it again. We can give you some more details about this particular acquisition process. In Q3, we also closed our corporate financing. We have discussed it already. We discussed it during our half-year conference. We finalized certain agreements which we had signed with financial institutions. And right now, I'm in a position to tell you that we have a number of agreements in order to ensure secure financing of our projects until 2026. We are talking about concrete agreements, hardcore agreements with, we are not talking about any conditional provisions, contractual provisions. All those conditions have been set in stone, so to speak. So we have signed all those agreements and we are secure in order to, we are secure that our corporate financing is guaranteed until 2026. This is an important matter to us because, as you know, those financial institutions need to define and analyze all the risks. They are analyzing all our models, all our plans, all our returns and strategies, all our efforts and measures that we are taking. This is a time-consuming process, and declarations are fine. However, we are looking and we are happy to tell you that we have already arrived at a very concrete level of those agreements. And those agreements are favorable to us, or very favorable to us. And so our corporate financing is guaranteed until 2026 right now. This is very satisfactory to us. And this is also a signal or a proof that that both our measures that we have been taking and our prospects for the future are fruitful, and we are looking forward to that. The Research and Development Center in Tarnów is now brought on stream. We are talking about the Research, Development and Innovation Center. This is not a newfangled fashion, so to speak. This is something that we really need. This is a very modern, state-of-the-art center, R&D center. When we started this project in August last year, there was nothing there, and we told you that we would be bringing that center on stream by the end of 2018. Nobody believed us. You decided that this is not possible. However, we did achieve that, and the center will be in operation as planned. We are reviewing the schedules. We are defining our next steps in terms of our research and development activities. There are a number of projects that are already in progress at a very advanced stage, at the semi-industrial stage. And this is a huge center. This is a huge hall. And this is a place where we will be delivering all those projects. Given the acquisition of the Compo Expert Group, it will be necessary for us to review certain projects and maybe drop some of them, because the Compo Expert Group has kind of changed that situation. Maybe some of those projects will be not necessary anymore, and we will move or transfer those funds to other goals or projects. We have mentioned the rising prices of energy carriers. This is something that is out of our control. However, we can assume that this will be coupled in the rising prices of our products, and to a certain extent those rising prices of energy carriers will be transferred to our clients. In certain other industries or sectors, this is easier. To transfer or offset certain rising prices of certain energy carriers to the prices of final products. We have analyzed the rising prices of our energy carriers in Q3. You have to remember that our potential in that particular area is limited. First of all, we had a difficult weather conditions. We had drought in Poland, and in our main production segment, which is agrofertilizers, the situation changed for the wars. During our half-year conference, we also talked about the situation in terms of the storage levels of our distributors. This is something we have to remember about as well. On the other hand, however, we have taken a lot of measures and a lot of steps in order to reduce the imports of fertilizers. And I can tell you that the commitment that we gave you during our half-year conference has been met, and the data which will be discussed shortly by Mr. Paweł Łapiński are a proof that we have managed to deliver that promise. This required certain flexibility in terms of our prices, so as to make sure that if we calculate the risk of certain fertilizer imports for certain distributors, we needed to be sure that this will not be the last transaction in the history of our cooperation with certain distributors. So we needed to be flexible here in terms of the cooperation with our distributors. On the other hand, however, we have certain provisions in our agreements that allow us to increase our prices to a certain extent. Some of those events were very short-term horizon events, and we needed to be very flexible and needed to act with a great resolve and very quickly. We do not want to transfer or move all the costs to our clients. We have taken a number of measures to rationalize our costs, to tap the synergy effects, to leverage the benefits which come from the fact that we are a group of entities, and this will be clear when Mr. Paweł Łapiński will discuss this specific data for 2016, 2017, and 2018. A number of costs went down, so whatever our operations are on the safe side, and the quality of our production is on the safe side, we are cutting costs consistently due to the effect of scale and synergies. We are consistently delivering that promise, and we are reducing certain cost items which are under our control. This is a process that we are delivering with a great resolve, but also comfortably enough, and we are able to show you the results today. Obviously, there are certain elements or certain events that make us very satisfied. And we are receiving certain signals that our actions, our measures are appreciated. I'm talking about awards, especially the award for being the most attractive employer and the employer that takes greatest care of the social dialogue. Those questionnaires were taken by a number of students from a number of universities, and Grupa Azoty has been listed as the most attractive and desirable employer for those students. This comes as no surprise because this is a result of our programs, of our cooperation with the universities. This was welcomed by us with great satisfaction because this is our commitment. This is something that we need to deliver. We have made certain promises and we will be delivering on them in order to make sure that we have a new generation of employees in the future. In September, we were also listed as one of 30 companies listed in the Developed Market Index. This comes as a great satisfaction for us as well. However, on the other hand, there are certain consequences to it, and we will discuss it later on. So on the one hand, this is a great satisfaction, this is an award, this is an appreciation, but it also could have certain negative effects, certain negative consequences, and I'm talking about the share price. Ladies and gentlemen, all our measures that we are taking are delivered consistently, with a great resolve and with great effects. And all the tweets and all the press releases are also a proof of that. We showed you a longer time perspective, a longer period, back to 2010. Especially in terms of the agro-fertilizer segment, you can see that this is there's an effect of a cyclical business. And we can also see certain events which we need to learn how to live with. We need to learn how to work efficiently despite those events and despite this cyclical nature of our business and this very specific structure of our revenues. This is why we are diversifying the sources of our revenues. We are trying to reach certain new areas, certain new sources of our revenues in order to minimize the negative effects of the cyclical nature of our business and make sure that the group is always on the safe side, regardless of the market situation, the market landscape in specific product groups. All in all our measures are delivered consistently and successfully. When we move on to discussing the specific results and performance of Q3, we will be referring those results to the 9 months of the year, of the previous year. I want you to remember that you need to compare this year's performance to our performance in terms of comparable items. There are certain data that are used and published by certain analysts this data is already outdated. So I will encourage you to review or refer to the report of the qualified auditor for 2017 and focus on 2 sentences that are talking about the quality of our previous reports and financial statements for 2013 and 14, for instance. And the qualified auditor was sure that this data is absolutely outdated and is not something that we should compare our performance to. During our press conference, this issue came up. We are sometimes referring to our predecessors, for instance, to Police, and the consequences of this infamous investment in Senegal. Considering our financial position, the accounting records, this issue comes up again and again, and this has affected our performance, our results in 2018, whether we want it or not. This is a process that we need to continue, and it is continued in line with all the highest standards that are in effect that we need to stick to. And the Polish Financial Supervision Authority has never suspended the listing of our shares. There is no administrative proceedings in progress against us. Everything has been explained, everything is under control, and this process is accurate and in line with all the rules and all the regulations, and with utmost diligence. We will move on now to this discussion of our key financial performance for Q3 2018. On this particular slide, number 3, you can see our highlights in terms of our consolidated revenue, consolidated EBITDA, consolidated EBIT, and net profit or loss. And if we look at the cyclical nature of our business, there is a certain phase that we are at right now, and more specifically, which will be discussed in more detail later on, there are certain events that are absolutely beyond our control. And despite those events, and despite major challenges from the external environment of our business, we are delivering great performance with confidence. I will now give the floor over to Mr. Paweł Łapiński, Vice President of the Management Board of Grupa Azoty, to continue the presentation. I will start with our performance for 3 quarters of 2018. The revenue came in at 7.2 billion. EBITDA was lower, down by more than 400 million PLN year on year. I will discuss the reasons shortly, but first I would like to show you the structure and the share of the fertilizer business, which is below 50% right now. This trend will be continued. This is something that we had planned, and we are delivering consistently so as to make sure that the impact of this particular segment, this particular business, is more controlled and is lower. In terms of EBITDA by segment for quarter 3, you can see that all our segments had a negative effect on our EBITDA delivered in quarter 3, and mainly the agro segment, which is obviously the effect of the rising prices of gas and other energy carriers, and also CO2 emission allowances. Also, the chemicals segment had a great negative impact, especially in terms of melamine and technical grade urea. And also the situation on the titanium white market changed for the wars. And the plastics segment, we had a certain cool down in terms of the demand for those products. But the negative effect is mainly it's mainly generated by our agro fertilizers business. Other segments had a negative effect on the EBITDA level, but not as much. Moving on to quarter 3 and sales volumes. Sales volumes resulted in lower EBITDA. Sales prices had a positive effect. However, the prices of our raw materials on energy supplies had a negative effect, which offset the positive effect of the other items. To date, year to date, sales volumes generated 48 million PLN, and the prices of energy carriers accounted for nearly $500 million PLN. Moving on to a more detailed analysis, you can see that the prices rose especially for the CO2 emission allowances, which the price of those allowances doubled over a couple of months. Luckily for us, this price has been stabilizing for some time now, and the group bought those allowances on a regular basis, month after month. So the rising prices of this particular item, cost item, is not as bad. We are talking about the weighted average increase for the couple of months. Electricity prices went up as well. However, we're still on the safe side here because we had purchased our electricity in the past, which was a forward-looking action. So certain contracts were signed 3 years ago, and the rest was signed 2 years ago and last year. Therefore, we are secure in that respect. So the rising prices of electricity will be not as high as on the market right now. And last but not least, the rising prices of natural gas. You can see very clearly the difference between 2017 and 2018, where the prices were abnormally high compared with the previous year. It usually went down during the summer period. Right now, it went up in the summer, which is not regular. The prices in the summer were higher than in the winter time, especially in Q3, which was related to the level of temperature in Europe, where the cooling systems in nuclear plants failed to operate efficiently due to that abnormal weather, the abnormal weather conditions. This obviously had an impact on the prices of gas, and the rising prices of gas were a consequence. We are talking about 350 million in terms of concrete monetary effect, and around 24 million. Our fertilizer business were hit the most by the external macro environment. We have increased our prices for a couple of months now, and those hikes in prices are considerable. So we have increased our prices by several dozen percent. We are setting our prices a couple of days prior to the first day of the month. We cannot transfer the rising prices on the price of our products, and this is something that happened especially in September for fertilizer prices in Q3. This situation is now more stable, it is more under control, and in the future, if we see a great decline in prices, in gas prices, then we will have a certain effect, positive effect for us, and I believe that our performance will be increasing, will be rising. So the main driver in terms of our performance are the prices of gas, and this will continue in the future. In terms of the volumes have been corrected. We're talking about around 170,000 tons, and the structures diversified. Some of the volumes went down, some of other volumes went up. So if we are talking about 100,000 tons, then the main part, the lion's share of that figure is ammonia. And the level of costs and the level of gas prices, impact of the gas prices is the highest for ammonia. and the market was not able to accept the rising prices of ammonia. So we could not offset the rising price of gas by increasing the prices of ammonia products. The market did not accept that. But if we're talking about the volumes except ammonia, then those differences are not as considerable. A glance, a couple of words about the deltas. The deltas are rising. We need to remember that our market environment and the benchmarks are not European benchmarks. We're talking about the border, certain borderline between Europe and Asia. Therefore, they do not reflect the European level of gas prices, because what has happened with gas is a specificity of our European market, and those benchmarks are not clearly and purely European. However, the prices were increasing all across the board, and we need to also remember about the negative balance for urea, especially in China, in terms of the level of supply and demand, and this was also a main driver, and this will be the main driver in the future as well. In terms of compound fertilizers, the situation is, in terms of price volatility, the situation is not as bad. That specific market is more stable. However, the situation was still very challenging and difficult over the past couple of, especially in the past 2 quarters. A couple of words about import figures. There were considerable changes in terms of the imports of fertilizer products, especially for 2 major products which are competitive to our products, namely urea, where imports went down, and ammonium sulfate, where the situation practically has stabilized and the rising imports, the imports are not going up. Or if they are, they're not going up considerably. The measures that we have taken to reduce imports are fruitful and successful. We're able to successfully deliver that process, and we'll continue it. A couple of words about the chemical segment, which we will discuss in more detail later on. I would like to point out at this time that for alcohols, oxo alcohols and plasticizers, we saw a considerable growth in propylene prices. For urea and melamine, we had a certain situation, certain problematic situation due to rising gas prices, which we were not able to transfer to the product prices. In terms of titanium white, there was a major inflow of titanium white products from Asia after the US market had closed. Mr. Wadatsky will probably discuss it in more detail. All in all, as a result, our revenue for the 3 quarters are as shown on screen, and 3rd quarter went down year on year for the reasons that I have discussed before, with falling EBITDA and EBITDA margin. In terms of our market environment, we have discussed it already. We're seeing increasing prices of titanium white, but this is offset by imported titanium white products from especially Asia. Propylene is going up. You can see that those deltas have flattened out, and as a consequence, our profitability in this segment of oxo alcohols is lower. And last but not least, plastics. The situation in plastics is more or less stable, especially in terms of the structure of the demand, especially in the automotive business. This is a slight reaction. This is a reaction of our customers. Decisions are changing in the automotive business. However, two other businesses, two other segments of our clients saw rising demands, especially in terms of foils and construction plastics. The situation in those two segments is improving considerably, and we are also taking certain measures to change that structure, change the sales structure. We have a new plant, a new unit. This will come as a great help for us. This is a unit where we'll be able to produce foil more efficiently, and this market is very promising at this particular time. The new unit has been brought on stream and it operates almost at its full capacity. We are driving down the share of, or reducing the share of caprolactam as planned. We are building the compounding unit, which will increase our production capacity sixfold, and around 70 or 80% of the capacities of the new unit has already been contracted, so the offtake is there, and this new unit will be brought on stream and will be launched with considerable capacity, at considerable capacity levels. You can also see certain price deltas or pricing trends. We are talking about slight weakening of in that particular area. However, as I told you before, we are trying to modify our sales structure, the client structure, customer structure, in order to respond to those market trends. There are also certain synergy effects for especially fixed costs, and this is especially visible in our fixed costs. This is a result of the measures of synergies that we achieved over the couple of years. This helped us to survive this very challenging or difficult market situation as a group, and we reduced our costs, especially for external services, and this is a permanent trend. Those prices have been, or those costs have been falling steadily for a number of years now, and we are talking about 80 million PLN in savings. In terms of our financials, the situation has not changed considerably versus the previous quarter, with two differences. In the last week, we managed to guarantee the cash pooling, the currency cash pooling with the bank, PKO BP. So our group cash pooling will also include ATT Polymers and the new group which we have acquired. We're talking about German businesses right now. And as I told you before, during the previous conference, we are trying and we're doing our best to deliver those synergy effects, especially in the financials area. And we estimate that the synergy effects will deliver a number of couple of million of euros next year. Our net debt went up, and you need to consider this difference. And we're talking about around 400 million. If it had not been for that particular difference, this particular ratio will look quite differently. However, all in all, our debt went up. We are doing our best to drive it down. And in terms of our investments, our EBITDA went down by 400 million PLN. Therefore, we needed to review our CapEx plans and the schedules for our investments. We are planning to spend around 1.1 billion PLN for investments, 1.3 billion PLN. That was the plan, and the forecast for 2018 is 1.1 billion PLN. We are sure that we will be able to deliver that particular forecast. And a couple of words about our price shares. We have received a number of questions concerning the prices of our shares. It is obvious for you that the share price is impacted by our performance, by the situation in the fertilizers markets, especially driven by rising gas prices and also electricity and CO2 emission allowances. These are the factors that have a considerable effect on our share price. For KGHM, it's always copper prices. For us, it's always gas prices, and they have an automatic impact on our share price. However, we need to also remember about the get-back affair, the get-back problem. We are talking about a number of investment funds, where people deposited their money or invested their money. This was also a negative factor for us, and it had a negative impact on the share price. The dividend level versus our capex. This is also an issue that has been brought up time and again, especially in the context of our. And also, you have mentioned that we are not showing you the concrete results of our investments. This is also something that can impact the share price at a stock exchange. However, we often cannot show you all the details of our investments, of our capex projects. This way we would reveal our plans to our competitors. Therefore, there are certain details that we need to hide from the market in order to efficiently continue our business and achieve growth and success. In terms of our FTSE, the changing share price due to reallocation between the FTSE and the advanced markets index, there are certain investment funds that focus on the developed markets segment. There is a certain gap right now because those funds have not determined their position yet in terms of the reallocation. All in all those factors had an impact on our share price, and we need to also remember about low free float. When the situation is reversed, then the low free float level will be to our benefit. You have to remember about that. We are talking about the group right now, but if we focus on Puławy and Police only, then the situation looks quite differently. In Puławy, free float is at around 3%, and at Police it is around 4 or 5%. Therefore, if we consider certain market conditions which are specific to Police and Puławy, then those two companies have a very different situation or face a very different situation. Therefore, to have specific comments on the capitalization, on share price volatility or share price changes, you need to be cautious in that approach. You need to remember about the group and also specifically about the particular situation in Police and at Police and Puławy. The effect of the negative impacts of those factors that I have mentioned will not continue forever, and it's being kind of extinguished as time goes by, and this trend is likely to reverse, and this low free float level could actually work to our benefit. I'll now give the floor over to Mrs. Izabela Świderek, who will discuss the performance at Grupa Azoty Puławy. In reference to the performance in Q3 this year and for the 9 months of this year, all those factors that we have already discussed were important to us as well. However, both for Q3 and for 9 months of the year, our revenue went up year on year, which was unfortunately considerably offset by the rising prices of our strategic carriers and raw materials, especially natural gas, coal, electricity. Those rising prices increased our costs, operating costs, which was obviously reflected in the level of our EBITDA and net profit. If I were to refer to certain positive items, or more specifically segments, then the third quarter of the year was the period where we saw a positive performance in 3 segments, namely chemical segment, which had a positive impact on our EBITDA chemicals. We are talking about 27 million PLN, agro at 11 million PLN, and also our energy segment. Unfortunately, for the 9 months of the year, the situation is quite different. We reported a positive impact of the energy and chemical segment. However, agro weighted heavily on our performance, reducing our results by 70 million PLN. The main fertilizer segment, the main product segment, which is fertilizers, accounts for 55% of our business. This level has been changing over time, but all in all, we're talking about 55%. And the revenue of that particular segment were lower year on year. EBITDA went down by 63 million PLN for Q3 and went down by more than 150 million PLN for 9 months. And the costs of our operations were rising, mainly due to the rising prices of gas and other energy carriers. So we are talking about 85 million of additional costs in Q3 and more than 150 million PLN over 9 months. And this is only due to the rising gas prices. In terms of coal, we are talking about 17% increase, which weighted down on our performance by more than 8 million PLN in Q3 and by more than 16 million PLN in 9 months of the year. And despite our measures to cut costs, for instance, selling costs and other cost items, we were not able to offset that particular trend. If I were to refer to the structure of our product segments, then the lion's share of our sales is generated in the sales of fertilizer products. And we are talking about 1.1 billion PLN of a positive effect on our revenues, which went down slightly year on year. We're talking about a decrease of 15%. For phosphate and compound fertilizers, the situation is quite different. This trend is going up. And we had a positive effect of nearly 160 million PLN of an increasing revenues. In Q3, we saw an increase in prices for most of the products sold by Grupa Azoty Puławy. However, those prices in quarter three, however, for 9 months of the year, those prices were lower year on year. The chemicals segment is the second main segment of our business. The chemicals segment fared well, reporting an increase in revenues both in quarter three and also for the 9 months of the year, year on year. We are generally speaking we are talking about an increase in revenues at about 40%. In addition to our flagship product, which is melamine, we are building our sales volumes on the remaining two main products, namely urea, which generated 213 million PLN in revenue, going up by nearly 20% versus the previous year, and the last but not least, the other product that had a positive impact was caprolactam. We are talking about nearly 330 million PLN, and melamine, which increased our revenues by 390 million PLN, both in quarter three and in the 9 months of the year. The revenue for that particular product went up considerably. We are talking about around an increase of around 38%. In addition to those segments, we obviously focus on a range of investment projects. And the total CapEx spending came in at nearly 330 million PLN, which was spent on our investments in progress. Those projects are listed on this particular slide. We spent more than 30 million PLN on the construction of granulated prilled fertilizers based on ammonium nitrate. This project is in progress. It will be delivered by 2020. We also had a number of other cost-intensive projects, especially the upgrade of the production unit of the nitrate acid. This project is to be completed in 2024. And obviously our flagship project, which has been launched, the construction of our power generating unit at Puławy, or power generating blocks. We are selecting the general contractor for that particular investment, and we are talking about the spending of 890 million PLN. This project is to be brought on stream by 2021. What's also important is the fact that the situation of Grupa Azoty Puławy is stable, is under control. All our ratios, especially liquidity ratio, is still very high, exceeding 2, the level of 2. For the 3 quarters of the year, our net debt is negative at minus 515 million PLN, and our debt ratio is also negative at minus 1.54. As you can see, our financial situation is stable, although even despite certain negative factors which drive up our costs. Thank you very much, And now Mr. Włodzimierz Zasadzki will discuss the situation at Grupy Azoty Zakłady Chemiczne Police. First of all, I will try to speak in a nutshell, because most of the major information that has already been discussed by Mr. Łapiński. I would like to focus on certain specificity or specific nature of our business at Police. There are two slides for our consolidated result and individual or separate results. And if we're talking, as you can see, our consolidated results are positive. I did it on purpose because we're still suffering due to the effects of our infamous Senegalese investment, and it had a negative effect on the consolidated performance at minus 44 million PLN. This is a purely accounting measure. This is a purely accounting exercise, so to speak. We needed to account for that particular effect. It has nothing to do with our cash flows. You need to remember about that. Our separate results are quite different, and the effect of the Senegalese project on our separate results is actually positive due to the reversal of due to the buyback of the shares. We received 11 million PLN. This was a positive effect, and we are looking at certain injections in the future as well, the cash injections. In terms of our separate results, they were impacted heavily by the external situation in the market, the macro situation. Obviously, I'm talking about the rising prices of gas. At Police, it has a major effect. The agro segment at Police could be regarded on a twofold basis. Well, I'm talking about compound fertilizers, and the volume of sales of compound fertilizers went up by 5%, while the prices of those products did not catch up with the rising prices of gas. It still went up. All in all, the financial situation in the compound fertilizer business is not very much different from the previous years. I would like to emphasize that. However, the effect on the agro business in general, the agro business in general was impacted by the production of urea and ammonia. And this slide shows clearly that those volumes went down. Urea went down by nearly 30 million and 30%, and for ammonia we are talking about the decrease at around 63%. We are using ammonia to produce compound fertilizers, but only partially. A considerable share of ammonia is sold to external customers. Therefore, at a certain point, we decided to switch off one ammonia production line in order to meet our in-house purposes only to produce compound fertilizers, because the market price of ammonia sold to external customers was not high enough to cover our costs, variable costs. Therefore, all those changes in prices that we were talking about before, prices of natural gas, price of CO2 emission allowances, impacted us as well, but only for certain products and not for compound fertilizers. In terms of titanium white, I would like to explain a certain issue. The results generated in Q3 are lower than a year before, which is due mainly to the difficult market situation, especially lack of imports or reduced or closed American market, and obviously imports of titanium white from China. However, Q3 was not a decisive quarter in terms of our performance in that segment, because the financial performance, our financial performance for titanium white went up versus the last year for 9 months of the year, and the margin went up from 21 to 28%. I'd like to emphasize also the fact that neither our financial liquidity nor our other financial performance ratios are under any threat. Our liquidity is comparable to our previous year's results. Our net debt went down, and the EBITDA or net debt to EBITDA ratio is also comparable year on year. A couple of words about investments. If you have further questions, we will discuss them during the Q&A session, but I'd like to tell you at this point that our main investment, a project which we called Polimery Police, is progressing as planned, and I believe that in Q4 we will be able to report certain major developments for this particular project. But we have also completed another significant investment project, upgrade of sulfur acid production unit, which will change the structure of our production and which will improve our efficiency in that particular area and drive down the costs of production of compound fertilizers too. Last but not least, I do believe that this will be important because in the context of this very challenging and difficult market condition and its negative impact on our financials, we have not resigned from our upgrade projects. We spent 40 million PLN more than in 2015 or 2014, which were very good years. We are spending more on the upgrade of our units, and we are talking about the spending at the level of around 120 million PLN. Our production units need those upgrades, and we will always have the money to spend on that. Thank you very much for listening. And now, Mr. Artur Kamiński will discuss the situation at Grupa Azoty Zakłady Azotowe Kędzierzyn. Thank you very much, ladies and gentlemen. Welcome. To wrap up that presentation, I will discuss the situation at Kędzierzyn in a nutshell. In Q3 of 2018 and year to date for the 9 months of the year. The main highlights, main performance parameters are presented on that slide that you can see right now. We're talking about EBITDA, revenue, and net debt, and net profit, I'm sorry. We improved our revenues up by 14 million PLN in Q3 of 2018 from 44 million PLN to from 440 million PLN to 450 million PLN. The same for our performance year to date for the 9 months of the year. We are talking about 1.3 billion PLN, going up by 63 million PLN year-on-year. For the 9 months of 2017. I'd like to mention at this point that the improvement in this particular area, I'm talking about revenue, was due to much higher prices of our products in oxo alcohols versus the last year, and also positive differences for oxo alcohols and fertilizers. We have discussed it before, and despite the fact that our revenue went up, I will not discuss all those negative factors again, because all those factors impacted our company as well, just as the other companies in the group. However, we expected the situation. It came as no surprise for us. We knew what the macro environment looked like, especially the record-breaking prices of gas, and also considerable increase in the prices of CO2 emission allowances, and also electricity and coal. At Kędzierzyn, we need to also remember high prices of propylene, and a negative effect on our EBITDA was also due to the summertime maintenance shutdown of our installation. Last year, this maintenance shutdown was planned for June. This year, it was in Q3. Therefore, we had a negative impact of that particular factor at minus 25 million PLN. This next slide shows the correlation between our EBITDA to date in the first 9 months of the year versus the previous year. You can see that the level is at 73, nearly 73 million PLN versus 161 in 2017. This was mainly due to the situation in the fertilizers business, which went down by around 75 million PLN, and also oxo alcohols, which went down by 10 million PLN. Which was obviously coupled by the high prices of gas. Our fertilizer business in Q3 2018 delivered EBITDA at minus 24.7 million PLN and revenue at 208 million PLN. Year to date, after 9 months of the year, EBITDA came in at nearly 13 million PLN and revenue came in at 617 million PLN. Obviously, all those negative factors which we have mentioned time and again apply also to that particular business at Kędzierzyn. But the volumes are going up in our fertilizer business. And if we compare 2017 and 2018, we generated higher volumes of nitrogen fertilizers, going up from 162 tons to 178 tons year on year. And this increase by volume was due to our storage levels of our products, which were accumulated before this maintenance shutdown. And we have great capacity, storage capacity at Kędzierzyn, and therefore we were able to improve, all in all, our volumes. However, we had a major decrease for other products in terms of volumes. but you need to remember that other products cannot be stored in such great amounts, in such big amounts as nitrogen fertilizers. In terms of our revenue structure, nothing has changed here. Nearly 70% of our revenues are generated in by nitrogen fertilizer sales, and 30% for other products. Our OXO alcohols business also faced certain problems and needed to struggle with the rising prices of gas and the difficult macro situation. Therefore, we saw EBITDA at minus 4.3 million PLN, while EBITDA for the 9 months of the year came in at 25 or nearly 26 million PLN, and revenue at 670 million PLN. While in quarter 3 it was 226. In terms of volumes went down slightly, which was due to the fact that we had a maintenance shutdown in a different period than before, and our storage capacities were much lower for OXO alcohols than for fertilizers. Our flagship product is still OXO VFlex. It sells very well, and the sales volumes for the 9 months of the year were very high. In terms of our financials, our profitability ratios, first of all, were impacted by the market situation. Both our EBIT and EBITDA went down. Because all those factors, negative factors we were talking about, have a direct effect on these particular ratios, profitability ratios. In terms of liquidity ratios, our current ratio went down slightly, but still its level is safe. And in terms of our debt ratios, we're talking about total debt ratio and net debt. They went up slightly, or stayed flat more or less. And in terms of net debt to EBITDA ratio, quarter on quarter, it increased due to lower operating results, that is EBITDA, but still we are on the safe side. I'd like to emphasize this again. We are still on the safe side here. Thank you very much. Thank you for your attention. Thank you for delivering the presentation. Our presentation is brought on stream online. I forgot to greet them as well. Welcome, ladies and gentlemen, who are watching and listening to us live. I did not forget about you. I'd like to thank you for your patience. I'd like to thank you for your participation in our presentation. Thank you very much to all of you in the room and to all the webcast viewers and listeners. I'd like to encourage you to take part in our future presentations as well.